Good afternoon.
Afternoon.
I hope that you can all hear me, and a big welcome to our first webinar on the changes brought about by the revisions to FRS 102 and the consequential amendments to the SORP that arrived on Halloween. Maybe not the most auspicious start, and this ends almost 3 years of discussions for the SORP committee and starts discussions for us. Hopefully not lasting 3 years, but I think there's quite a lot to understand and to take on as we tackle the new SORP. So with me today are Michael and Grace, and I would like to take this opportunity to welcome Grace to our PEM not-for-profit team. Grace comes to us from Deloitte and has been working in the charity sector for almost 14 years with a wide variety of large and small charities, stretching from Charities Aid Foundation, Royal British Legion, that you may learn more about later in the presentation, to small family foundations. So thank you to them and thank you to you. You will see on the screen there is a Q&A little box at the top of your screen. Please do add questions as we're going through, and we will either pick them up as we are talking or at the end of the session today. So thank you. And just to remind you all that this is being recorded, so we will send round the slides and the recording in a couple of weeks, just to make sure we've got everything. So thank you very much, and technology willing, we are off. So as I said, this has been a very long process, and for those of you who joined our session in June, you will have seen this slide before with October as the planned date of publication, and they just made it. For those of you with a foot in the higher education camp, also the FEHE SORP was published on the 3rd of November, so we have all our latest documents ready to go. For charities and non-profit organisations with December year ends, the first year of application is going to be the 31st of December 2026. March year ends the 31st of March 27, and so on. And although 27 seems a long way away, for those monitoring the countdown to Christmas, these things creep up on us remarkably fast. So we're ready to go. We're already almost finishing the comparative period. We're going to focus on the trustees reporting today and the requirements, although we are going to touch a little bit on the outcome of the thresholds consultation before we start looking at the trustees reporting. We'll also then think about the main changes, and we're going to look in a little bit more detail on particularly reserves, volunteers, impact, sustainability, and briefly touch on fundraising. While there are no particular surprises in the final SORP, there are some challenges for charities to meet the new reporting requirements and to enable report writers to plan and prepare a compelling story. And this is a really good time before we rush into the accounting to sit back and think about objectives, KPIs, demonstrating impact, and all of those things that the narrative will require, not just the numbers. So we're going to we will end with some thoughts about transition and the next steps and how you can prioritize, structure the approach to this. So handing over to Michael.
Thanks, Nikki. So before we dive into the new SORP, we're just going to cover off the outcome of the recent Department of Culture, Media and Sport consultation on audit and independent examination thresholds. So this has been done concurrently and closed in June, and the outcome was published on the 31st of October 2025 as well, so the same day as the charity SORP. However, it is worth noting that the thresholds are still operating independently to those tiering thresholds that Nikki will come on to in the SORP. So overall there are 21 different thresholds that were reviewed, but this table sets out those that are most commonly used from an accountant's perspective. Despite proposals to increase the charity registration and annual return requirements to 10 and 20,000 respectively, those thresholds have remained unchanged. I believe, looking at Charity Commission website, most of that is to do with that they don't have the systems in place to make the relevant upgrades to allow those changes to be made. But perhaps watch this space. However, there have been a number of increases, perhaps over and above where we thought they might land, certainly to the independent examination and audit thresholds. So firstly on here, so the independent examination threshold is increasing from £25,000 to £40,000. So that is a welcome change for some of our smallest charity clients. The next one up is who you can choose as your independent examination, and this is a question that comes up quite often. So at the moment, if you have income over £250,000, you have to have a member of an accountancy body as your independent examiner. So actually below that, it can be anyone independent to the charity. So that threshold is actually increasing to £500,000. In terms of the audit threshold, so the audit thresholds have been unchanged for a long period of time, over a decade. And we have seen many organisations that have fallen into the audit regime purely because inflation, has increased the income that they now generate. So the audit threshold, welcome change here, is increasing by 50% to 1.5 million. And for those with a higher asset base who've fall foul of a smaller income threshold, that is similarly increasing in size. As to when these changes are coming in, not entirely sure. It says from the 1st of October 2026. We had a CPD course yesterday that implied it would be periods ending after 1st of October 2026, but looking at the guidance, I don't think that is entirely set in stone. So watch this space. Just for anyone that operates in Scotland, and PEM do have a handful of clients that are dual registered. Thankfully, the Scottish audit threshold is also increasing. So that has been £500,000, so half the size of the English threshold for some time, and that is increasing to £1 million. That's actually increasing for accounting periods on or beginning 1st of January 2026, so in line with the new SORP. So whilst this webinar is not focusing on the financial changes, I do just want to flag a number of the changes that are going to come up, because with things like right of use assets to be included on the balance sheet, this may significantly impact the reportable gross assets. And similarly, if you've got contract income and the revenue recognition is likely to change, you need to be thinking about those changes early, because whilst you might think you're going to escape the increased thresholds, the financial changes in the background may contradict that. Unfortunately, charities are still expected to flip-flop between the thresholds, and they'll need to think about the most practical approach. In particular, the current 2-year regime for companies, where you have to breach the audit threshold, is still not expected to apply. So those with significant one-off legacies are likely to still fall into an audit for 1 year only. But it's relevant in terms of thinking about the tiers and the reporting, as Nikki will go on to, particularly if you're likely to flip between what will be tiers 1 and tiers 2.
Thank you, Michael. So as Michael was saying, there's some new tiers and levels for legal requirements. And so one of the things that the SORP committee particularly looked at was whether there should be more tiers within the SORP. And the consultation proposed 3 tiers. That has not changed. So if we move on, you can see that the tiers here we've got are the tiers that Michael's been talking about and how we must account. So we've got less than 40,000 gross income. You don't have to use the SORP. You don't have to prepare group accounts. You don't have to be scrutinised, and you would fall into tier 1 if you prepared accruals accounts. So you only have to follow the SORP if you're preparing accruals accounts, and that's the same for everyone who's got an income of less than 500,000. with the new requirements and when they're in. So there is going to be definitely a watch this space during transition to make sure that you know which tier you're in for the reporting and which tier you're in for the sort of legal regulations. You can see that the audit threshold sort of sits in the middle of tier 2. So not everyone in tier 2 will be having an audit, but they will be complying with the tier 2 reporting regulations. And then we have tier 3 at 15 million, which is the same as the small companies threshold that are required to do a few extra things. So this is going to be an annual check, and that's stated in the SORP that you need to check annually which threshold you're in for the rules and which threshold you're in for reporting. Looking at the trustees report, and this is a quick overview of the changes and the impact of the consultation on the various levels and on various charities. So we can see that volunteer disclosures have previously were sort of narrative, should and may requirements. They've moved into tier 1. Every charity needs to give basic details about their volunteers, and we'll pick that up later. Future plans has also moved into tier 1, which was a larger charity requirement, along with reserves and detail around reserves becoming a must requirement, and going concern and must. So the terminology that's being used is still the same. It's must, should and may, but we can see particularly with those three around financial sustainability, they're now reporting requirements, must requirements for all charities. Tier 2 has one of the sort of most talked about changes, which is this focus on impact reporting. And particularly looking at the way the charity's work has made a difference to the circumstances of its beneficiaries and how it has provided wider benefits to society as a whole. So tier 1 charities are strongly encouraged to consider those two questions and to say something about their activities and their impact. But tier 2 charities must explain that and must look at the long-term effect of their activities on individual beneficiaries and society as a whole. They're encouraged to use KPIs, case studies, personal beneficiary, volunteers, anyone involved in the charity, any stakeholders that they've got to communicate the value and the impact that they're having. So that could be potentially quite an information gathering exercise. And again, we'll look at that in more detail later. The impact of material legacies is just to flag up that explanation is expected now for all of those charities with income over 500,000 to just link that to their reporting. And that, again, the theme of activities and reporting linking is quite key in the SORP. Tier 3, the larger charities, again, well trailed in the consultation, requirements around sustainability reporting. As a relaxation, performance of fundraising initiatives, or sort of understanding the cost of fundraising and what you get from it has been moved to a tier 3 requirement, so that there is some relaxation, but there is quite a trend, as you can see from those that discussion, to increase the requirements for smaller charities. Moving on, I just wanted to pick up some changes to the presentation, and part of this is about the fact that the trustees report must describe and is expected to reflect the presentation of activities in the numbers. So those two elements, the narrative and the numbers, should be talking and reflecting each other and saying how the charity is creating impact and what it costs to do that. So again, it's a similar slide looking at the presentation, but you can see in the smaller charity tiers, you're allowed to use now what's called a natural classification, or an activity basis. So the activity basis is the one that we're very used to. It's the one where you describe your activities, hopefully matching the ones you set out in your trustees report, and you allocate your costs across them. The natural classification looks more like this, and it looks more like potentially a set of management accounts where your expenses incurred are salary costs, premises costs, your grants. So hopefully more understandable and more natural for smaller charities. So this, I think, is a very useful thing to have a template, some guidance about this. But again, as Michael was saying about flip-flopping between thresholds, if you're hoping to grow or you're likely to go across that 500,000 key tier 1, tier 2 boundary, this may not be the right answer, but it is a very useful concession potentially made by the SORP and made clearer. A last section from me, I'm moving on to reserves, and reserves are a key element in the charity's story, and about that financial sustainability that I think is becoming a focus for the Charity Commission. So it gives a picture of how a charity uses or potentially hoards its donations, and the financial responsibility and financial management of its resources. So there is extended disclosure for all charities. As we said before, reserves, the sort of previous statement was simply that the charity must explain any policy it has for holding reserves and state the amounts of those reserves and why they're held. If the trustees have decided that holding reserves is unnecessary, the report must state this fact and provide the reasons behind this decision. Now, that 2 sentences was pretty much all any charity had to do. That was the one must requirement. And although lots of charities gave more and followed that sort of recommended should requirement, that was the sort of simple statement. So no one can get away with that anymore. There is that statement, why you have reserves, but then that needs to lead into your potentially a reconciliation of the reserves held, so how your free reserves relate to the figures in your accounts, how you've identified designated and committed amounts and the likely timing of any future expenditure, so why you've got those designated reserves, committed amounts, and also compare your reserves with the policy, explain your future plans and activities. And you can see there that all of these topics, your future plans, your going concern, your reserves, are clearly expected to be linked together. So these are not siloed explanations handed out to different people to write that bit of your report. This is a very comprehensive statement of what your plans are and how they knit together. So to try and think about what this could look like, and it's going to look different for every charity. So there's a sort of myth of 3 to 6 months of reserves feels all right. That may not be the case. It very much depends on what your charity does, what your operating model is. Do you need more than that because you give very long-term grants, so you want backing? Does your income fluctuate dramatically from one period to the next? Is it very stable? All of those different factors are going to impact your reserves policy. And these are the kind of things that the SORP is now sort of pushing charities to tell that story about, to say why they've picked that target, how that helps them make that impact, how everything is linked together, and reserves provides your foundation. So I've put an example on screen. This one comes from the British Red Cross, and you can see that there's a little graph of how their reserves have changed. There's some explanation of why that's the reserve that they are setting. There's a reflection of the fact that it's changed. So this wasn't it's not a stationary position. They've re-looked at it, considered inflation, considered their needs, and so their target has changed that they're reporting against. And then they've said what they're going to do. The funds that are the fixed asset funds, the pension funds, that need to be taken out so that they can get a clear view of what is actually their free and available to use reserves and consider whether that's sufficient. So that's one way of telling the story, and particularly you'll see in all the examples I've picked, I have picked ones with graphs because I think it helps visualize some of these things. So moving on, jumped a little fast there. This is another example. This one is from the Royal British Legion. And again, they very clearly highlighted what's not available to spend, what's restricted, what's unavailable to use, and told the story again about their care homes, what they're doing, what their reserves mitigate against. It's fluctuations in income, the value of investments. It means that they're not forced to sell investments which might create a loss. So they've told the story of their operations and how the reserves fit into that pattern. So last one I've picked here, this is Blood Cancer UK, and this one is one where they've given that reconciliation of how their funds fit together, how their free reserves sort of fall out the bottom, what their target range is, and how that's in it. And you can see there that the range is actually quite broad. They haven't picked a figure as we saw British Red Cross had. They've picked a range here, and they've also got quite a range of designated reserves. And because that's quite a large amount, again, they've given more explanation of why those are held and what they're doing. So all of these examples are kind of picking out some of the key must requirements now and thinking about how they can be explained. So what next? If your charity has set out a policy before or has not, this is a really good time to actually review your reserves policy, refocus it, and think about how it fits in with those linked points of your impact, your financial sustainability, your going concern, your future plans. So reserves crosses all of those. So firstly, understanding your funds, identifying your functional assets, your designations, your commitments that fit with your plans, understanding the risks, how much does your income vary, how much of your cost base is fixed, what are your sources of income, what could you diversify, what could you change, and linking, as we've said, with future plans. Then it's time to agree the policy and disclose the policy, and just thinking about how that's presented. We'll come back to next steps, but CC19 gives a great deal of information for trustees when developing a policy and sort of talks you through those steps. So again, I would recommend that you take the opportunity to review that and to think about that in the context of the reporting. And now I'll hand back over to Michael.
Thanks, Nikki. So in comparison to the other sections of this presentation, this is a really short one, but important, I think. So volunteers are obviously key to nearly all charities because it very much starts with the trustees. And there's some of the new requirements are really bringing volunteers front and centre in the narrative reporting. So as in prior years, there's no requirement still to value the general volunteer time for the financial statements, but for the first time, all charities must disclose information about the contributions of the volunteers, in particular those in tiers 2 and 3. So you'll see in the table that those small charities currently don't have to disclose anything, whereas current large charities have to disclose what is a relatively small amount on the scale and nature of the contribution that volunteers give, with a few options. So that must for large charities is now moving across to basically be those tier 1 and therefore all charities. So that must now include basic narrative disclosure of the volunteer roles, so trustees or other volunteers, the activities they undertake. The disclosure about the optional hours remains optional, but it really must explain to help the user understand the scale and nature of the activities undertaken by the different volunteer groups. So how many trustee meetings you have, how long they last, any other roles that the trustees may have performed for the charity, as well as input from regular volunteers such as fundraising roles or anything else. So all charities have these volunteers. Trustees are playing a strategic role. Some treasurers may be having a more hands-on role, approving payments and helping with some of the financial record keeping. So the message really is that the trustees report will really have to have an update focusing on the story on the volunteers and their contribution to the charity. There's also, I think, as you move up the tiers, there's obviously more information that should be disclosed, and I think from a best reporting perspective, that should really be considered for all charities as well, if possible. So this includes some of the current disclosures on the number of the volunteers, and more details on the explanation of the activities that those volunteers provide to the charity. Obviously, you can continue to try and quantify that in terms of hours. And if possible, you can obviously quantify what that might otherwise have cost you should you have had to go and employ these people, particularly perhaps in fundraising roles. Charities are required to include some information on volunteers in the annual return, as it currently is, and the SORP making committee did note in their explanatory notes that they do not believe that providing this disclosure is going to be too costly or resource heavy for charities. So charities will need to consider what systems they have in place to monitor and record the contribution of volunteers. And as we'll kind of talk about throughout, with the comparative period starting pretty much straight away, this needs to be thought about sooner rather than later. So in summary on volunteers, there's been a real shift from optional to mandatory narrative reporting for all charities. It is tiered proportionately, so larger charities must provide richer data and analysis. There's more of a focus on impact storytelling, coupled with the impact section we're going to talk about. So what is volunteers' contribution? How can it be highlighted in the report as part of the social value reporting? But just to point out, there are no change in the financial recognition rules. We won't have to value the time in the income and expenditure statement, but there is a clearer separation between the financial and the narrative reporting required. So handing over to Grace.
Thanks, Michael. I'm going to talk to you first about impact reporting under the new SORP. So let's start by looking at how the approach to impact reporting is changing. So under the current SORP/FRS 102, impact reporting is encouraged but not mandatory. The narrative is often focused on activities rather than outcomes, and there's limited linkage between impact and financial data. So with the SORP 2026, impact reporting becomes mandatory for all tiers of charities. The focus shifts to outcomes, not just outputs. So it's about the difference your charity makes, not just what you do. Charities are expected to provide both qualitative and quantitative evidence of impact linked to their objectives. This can include case studies and KPIs. The narrative should now align with resource allocation and financial sustainability, making the connection between impact and how resources are used. So what could this look like? So on this page and the next, we have an example from NSPCC's annual report, which I think is a really good illustration of effective impact reporting. So as you see on this page, NSPCC sets out clear impact goals, such as everyone plays their part to prevent child abuse on this page, and every child is safe online on the next page. Their strategy is structured around these goals, and they explain what they want to achieve, how they plan to do it, and what influence they hope to have. They report on specific targets, like the number of times they enabled others to safeguard children, and show how they performed against these targets, including where they exceeded or fell short. So on this page, we can see how the report directly addresses the impact on the individuals they aim to support, which makes it clear to see the impact the charity has had overall. NSPCC also linked their work to real-world legislative changes, such as the Online Safety Act, showing how their advocacy led to tangible outcomes. So by grounding their narrative in their goals, this report enables year-on-year reporting against these objectives, which strengthens accountability and transparency. So on this page, we have an example from Motability Foundation, which I think provides another good example, particularly around grant making. So they directly ask grant recipients about the impact of their support and report on the results with statistics. So whilst I think this is a great example, I think it could be further enhanced with including prior year results to show the year-on-year movements. Their reporting includes both the perspectives of individuals and organizations funded, providing a rounded view of impact. I also like here on the right-hand side how Motability sets out how they measure impact. So they've done so using 6 outcome areas such as access, education, well-being, and choice and control to evaluate the difference their grants make. I think this approach is effective because it's evidence-based, it's recipient-focused, and transparent about both achievements and areas for improvement. Finally, we have this example from the Charities Aid Foundation group. So CAF's annual report is a great example of using case studies and personal stories to bring impact reporting to life. So this example is from a couple of years ago. And we can see on the right-hand side, it includes a case study with direct quotes from an individual from one of the organizations who've been supported, which is powerful and engaging. The use of pictures helps tell the story visually, making the impact more relatable and memorable as well. So CAF's report is also good because it covers the group as a whole, not just the UK parent entity. So I chose this page from the report in particular to show how they look at the impact at a group level, including subsidiaries, which gives a fuller picture of their reach and effectiveness. So I'm now going to take you through changes to reporting tied to sustainability. So environmental, social, and governance matters, referred to as ESG. So under SORP 2026, there's a real renewed emphasis on how charities report their approach to sustainability and ESG matters. So ESG reporting is mandatory for Tier 3 charities. These larger charities must provide detailed disclosures covering sustainability, social impact, and governance arrangements. It's also encouraged for Tier 1 and Tier 2 charities. So whilst not compulsory, smaller charities are definitely encouraged to include proportionate statements such as how volunteers are supported, as Michael mentioned, how environmental impact is reduced, or how ethical principles guide operations. So the aim is really to bring greater consistency across the sector, ensuring that larger charities demonstrate leadership in transparency and accountability, while smaller organizations report in ways that reflect their capacity and scale. So charities should provide a summary of how they are responding to and managing ESG matters. So this could include KPIs used to assess progress against climate-related targets, details on cyber and data security, business ethics, engagement and well-being, diversity and inclusion, and community involvement. So when it comes to reporting on environmental matters, and especially as we'll see in the examples in just a second, many charities are guided by the Streamlined Energy and Carbon Reporting (SECA) framework. So I'm sure you're all familiar with SECA, but just as a quick reminder, so SECA is the UK regulatory requirement for qualifying organisations to disclose their energy use and carbon emissions in their annual report. So for charities, this typically applies to those that are registered companies and meet the size criteria for large companies. So the reporting is divided into 3 scopes, each covering different types of emissions and their origins. So scope 1 and 2 relate to direct and indirect emissions, i.e. from the entity's direct operations, and then from the entity's consumption as part of their day-to-day activity, like consumption of electricity in their offices. And then scope 3 relates to indirect emissions as part of the entity's value chain. So this is things like business travel. So the goal of the framework was to drive transparency and accountability in environmental reporting. So what could this look like? So starting on this page with an example from Cancer Research annual report. So the charity sets out in their kind of introduction page its commitment to sustainability as a core part of its strategy. They clearly state their goals, such as reducing emissions by 50% by 2030, and link these objectives to their wider mission and values. So Cancer Research UK provides a detailed breakdown of how they are addressing their environmental impact, as we can see on this page. So what I really like about this example is they identify their carbon hotspots, they set out their action plan and report progress against their targets. So again, what I think makes this a good example is the clarity and transparency. They show not just what they're doing, but how they're measuring success and where they still have work to do. So in that way, their reporting is also balanced. So here's an example of SECA reporting in action. So Cancer Research UK presents their emissions data in a clear tabular format, breaking down emissions by scope and showing trends over time. So this level of detail enables stakeholders to understand both the charity's impact and its progress over time. So another good practice is explaining the methodology behind the numbers, how the emission calculations were taken from activity data. So Cancer Research UK on this page here are describing how they calculate emissions, what's included, and any exclusions or voluntary disclosures. So I think this transparency builds trust and allows others to understand and, if needed, replicate their approach. So this is an example from the Royal British Legion's accounts, which I think also provides a good example of SECA reporting with clear statistics and narrative explanation. So they outline their approach, the scope of their reporting, and the progress made in the year under review. Similar to Cancer Research UK, they note how their reporting has been compiled in line with the government's environmental reporting guideline and detail how gas and electricity consumption data has been taken from billing and invoices supplied by their energy suppliers. So we are now going to look at how both charities report on governance. So both charities have gone beyond environmental data to discuss governance and management structures. What I like about this example from Cancer Research is the image over here, breaking down clearly their governance structure. So what I want to kind of take away is that this is just as important as part of ESG reporting. It's not just about numbers, it's about demonstrating leadership, accountability, as well as a commitment to continuous improvement. So good practice also means covering broader ESG themes such as diversity and inclusion, safeguarding, and pay reporting. So here we have an example from Cancer Research. And what I particularly like about this report that made it stand out to me was the use of testimonials, including on this page from the campaign ambassador. And this is another slide, again, showing examples of how charities can weave these topics into their annual reports, providing a holistic view of their impact and values. So I'm now going to hand you over to talk about fundraising.
Thank you, Grace. So as we've said earlier, and I'm still, my mind is buzzing with lots of sustainability, but fundraising is another key part of charities' activities. And as we said at the start, this is one of the reporting requirements that's been relaxed, so it's just a tier 3 one. But I think as hopefully this slide shows, charities can't just forget about fundraising reporting because we still have that legal requirement lurking. So this is another instance where you need to understand both your tier and your legal requirements. So tier 1, there's nothing specific to say about fundraising. Tier 2, under the audit threshold, again, no specific requirements. But as soon as you come over the audit threshold, you fall within the framework of the Charities Protection and Social Investment Act 2016, which is the one that requires you to make certain fundraising disclosures in your accounts. So those still need to be made. Your approach to fundraising, whether you've joined the fundraising regulator, whether you were required to, whether you have done it voluntarily, how you're monitoring your fundraisers, whether you've had complaints, and particularly the steps you've taken to make sure that vulnerable people are protected. So that's required of all charities who are over the audit threshold to proportionally describe what they do in their fundraising and how they've taken those measures. And then we come to tier 3, where we're looking at the performance of the fundraising activities against their objectives and being clear about the sort of long-term impact as a, for example, a campaign for legacy, to increase legacies, is not going to yield immediate results, we hope. And the impact on fundraising performance is actually likely to be very much down the line in terms of the income increase. So it's quite hard to judge the spend on fundraising, and that's what this sort of disclosure for the larger charities is really pushing, to think about how you monitor and sort of demonstrate the value of that fundraising and campaigning spend. So I'm going to hand back now to Michael just to think about the next steps and transitioning to the new SORP requirements.
Thanks, Nikki. So firstly, we do have a Q&A, so please do start to think of any questions you may have from the discussion so far and pop those in the comments box as we're drawing to a close. So what should trustees be doing now? So obviously there's an opportunity as we start to get to December 25 year-end accounting and writing trustees report to start really thinking about the upcoming requirements now as part of that exercise. So you really need to be thinking ahead and assessing which tier you may fall into, and review the new associated requirements. This will obviously include the need to calculate the financial adjustments expected for leases and contracts as soon as practical. Identify the key themes and the subject experts. Please prepare for the changes in the reporting and the disclosures, but have a think about who may be responsible for drafting the various parts of the report. We know that obviously it falls under various trustees or management hands as to who drafts which section, and obviously it's always better to draft performance related ones sooner after the year end, but this is not always going to fall on those experts. As previous, there may be a wider range of people that need to contribute to some of the reporting that is needed, such as service line leads or delivery heads, or anybody who is linked in with the sustainability and the ESG side. You need to start reviewing the systems you have to collect the information, particularly if you're going to need 2025 comparatives when you're then presenting your 2026 trustees annual report. So if you've got KPIs that you want to monitor or report in the future, you want to be collecting that data already and storing it somewhere so you know where to find it. Are those systems sufficient for what you think you may need, such as volunteer hours, numbers, etc., and are they tracked? So start to update the narrative reporting, I think, as you're working on the 2025 and then the 2026 year-end trustees reports up to the new SORP comes in. Start to think about whether you want to incorporate any of those impact, sustainability and future plans into your reporting framework already. Consider the story if you want to ensure that you are not just jumping into a new regime, that you are starting to tell the story early. And engage with everyone in your organisation and your advisors, such as us, to ensure you've got systems and comparative information ready to be collected as soon as possible. So we are bang on time, I believe, in terms of where we wanted to be. So thank you very much, everybody, for listening. We do have some time for some questions and answers. If anybody would like to pop anything in the chat, please do so now.
Thank you, Michael. Thank you, Grace. I've, as I said, as we were going through, just thinking about some of that sustainability reporting, which was in a great a level of detail. But what do you think smaller charities can do to sort of start making progress in that area? I don't know whether you've had any thoughts on that. But I was just thinking about, what we do ourselves, which is beginning to track our carbon footprint, thinking about cycle to work schemes. That there are lots of small elements that I'm sure a lot of you are already doing that you can start pulling together to begin. As we've said, as Michael has said, it's always about telling the story of sort of your impact, your local environment, what you can do.
I think that as Grace has presented accounts from a number of larger organisations, they're obviously the ones that are often already doing much of this reporting, and they will be the ones that people start to look more on, I think, to borrow some of the better aspects of that reporting that's going to flow through. So, perhaps encourage smaller charities to look at similar organisations in terms of activities, even if they're obviously much larger, and see what they're reporting and try and get ahead.
Thank you. I've got a couple of questions coming up. So asking about whether and where there's guidance on the need for 2025 comparatives. There isn't specific guidance on it, but I think to tell your story and to look at the impact, it would be useful to start collecting it. And I think in terms of volunteer information, because that's something that you already may be considering, that would be a good one to think about having comparatives for. So I would say, yes, it's worth anything that you think is going to be in your story in the next few years to start collecting the comparatives in relation to that.
Yeah, I don't believe there's any requirements in the trustees reporting to have comparatives for much of the data, other than it obviously provides context on the story that data is then trying to tell.
Yeah, and I think that probably covers a couple of other questions. In terms of adopting early, in terms of the narrative, no, I don't think there is any requirement to say, because your trustees report is very much yours, and the requirements are broadly enhancing what was there, or making a must rather than a should out of what was already there. So I think there's already quite a lot of discretion in trustees reporting. So if there's a key bit that tells the story of your charity, then include it early. In terms of the accounting, that will have its own transition, and I've not heard yet of anyone who is wishing to adopt early the accounting requirements. So I suspect that will follow through in due course, but there is no reason why you shouldn't start making changes to your trustees report earlier. Also a question about whether there will be templates to prompt good reporting. The SORP homepage did publish some model accounts after the last SORP change, but quite a long time after the change in the SORP. I'm not sure that they're intending to do that this time. And certainly they may not be current to you needing to make the changes. So I think, as Michael said, looking at larger charities who do similar things or may have already sort of taken that step ahead is probably a good first step in considering what you might want your reporting to look like.
Yes, I think because the structure itself has not fundamentally changed, the headings, etc., are all similar. So the layout will be similar to what you've previously had. It's really going to be in the words and the content that's included, which obviously you can follow the new SORP, go through the bullet points and it is set out relevant to the tiering. So the tier 1 bullet points are set out first, then it follows on logically, but you should be able to, I suppose, easily identify perhaps which bullet points your reporting is lacking or needs to be improved for, and then again reach out, I think, to other similar organisations, or you can look into companies as well. Obviously, a lot of them do give good sustainability reporting already, so there's plenty out there on good reporting to perhaps borrow from.
And in terms of SCCR reporting, that is for the biggest of the big, but obviously for charities over 15 million will sort of fall into that. So they don't need to do the same level of detail as required by those larger companies. But that type of structure, as Grace was showing us, of looking at the your targets, your movement through the year, and actually understanding those emissions, may be something that those medium-sized, for Companies Act purposes, charities would like to do. For the SORP, it doesn't matter whether you're a corporate or unincorporated. If you meet that sort of 15 million, then you need to do some kind of sustainability reporting that, as Grace was saying, is proportionate to you. And just a slight plug here, but we have got some experience in beginning to map carbon footprints. So if you are interested in talking to someone about how you can start to map your carbon footprint and think about that, then we would be happy to put you in touch with our virtual finance office, who are beginning to do that. Any other points? If not, I'd just like to say there was a comment on the Charity Commission blog yesterday, which was, think about your trustees report as free publicity. And I know that many trustees reports are very much sort of black and white narrative. And I think his challenge, our challenge maybe, is to think about what your use of your trustees report, whether it can have broader use, and sort of how you can tell the story more dramatically, shall we say.
And I think if there are no further questions, we will let everybody have a few minutes back of their lunch hour. But if you do think of anything, please do get in touch with one of us after this, and we'll obviously make the slides and the presentation available to those who have attended. So I'd like to say thank you very much to everyone that's attended today.